Hey guys, Coldwater and Dan here from Phantom Trading, and today we're just going to do a quick breakdown on our AU short we took. I think it was during like New York
They're in
session.
New York.
Yeah. So
Yeah.
starting off, we're just going to start on the daily here. Um, Basically, we have like pretty bearish structure. As you can see, we have this leg that kind of broke down. We broke structure at this point here.
Then you have your high leg, daily high, and then
That's your
daily
daily
low
high,
here,
yeah,
right?
and daily low exactly. And then if we go over to the 4 hour, same deal. We're pretty bearish. Even within the last couple of days, pretty bearish. I mean, we're kind of like compressing here, but
He reacted off of the 4 hour pretty much wick, like OB.
yeah, wick slash OB here reacted off of that.
You have this four
So
hour bullshit
structurally, like I
behind.
think this can be confusing for some people because it looks like maybe we broke these highs and maybe we're bullish, but again, we have to pay attention to what we're reacting off of. This being a supply zone or an order block, right? So knowing that we reacted off of this after I guess from a few days ago, again we can kind of deduce from all of this price action that we're still pretty bearish. And you know what? Even zooming out, I'll go back on the daily for a second. I was kind of mentioning this to Dan. We also have like all this liquidity here. This is like higher time frame liquidity we're talking about, but really this is a sweep of liquidity. This is a bull trap again. It's kind of like the last video we did, or that I did, where I was talking about how we're tricking people into thinking, or the banks are tricking people into thinking that price is going to continue bullish, but really it breaks down. It still technically could continue bullish from here, but anytime I see a trap like this, I'm trying to trade away from it. Yeah, exactly. Yeah, we could continue from there too. Anyways, let's go back to the 4 hour. Again, bearish because we're reacting off of this. And I'll quickly go on the 1 hour. Now, guess what's kind of confusing about this trade is, again, because it's like price is kind of rangy and compressing. It's very corrective. It's not the clearest trade in the world, but if you follow the mitigations, it's the same thing. We know like overall that even as a 2 hour, right? If I'm selecting these two 1 hour blocks, that's a 2 hour order block, or even the 1 hour candle here gets mitigated. So again, we're bearish, right? And what do we have before that? Same thing, liquidity, and we sweep that liquidity here. So that's liquidity swept. Again, it's from a few days ago, but that's just it zoomed in a little bit. And then we're kind of continuing in this corrective pattern down. So now let's go into the 15-minute, and we'll take a closer look at kind of what happened today. This is London here, and this would be New York. So you kind of get an idea for it. So same thing, Dan, if you want to mark out like some of the mitigations you were talking about here. I mean, we have one here, right?
Yeah.
We have pretty much, yeah, so I'll actually mark them out too with you here. So we have this one. Remember, this is a 15-minute. We also have this one. This one's kind of weird because it almost closes above, but I would still consider that a mitigation. And again, liquidity, where's liquidity? We have some here, that gets swept. We have liquidity here, that gets swept. Even liquidity here to a degree. And then we kind of have our Asia range here, and that gets swept very subtly. Now, again, this is really hard, I think, for beginners to see because you're looking at a lot of like wiki price action. So really you have to zoom in here. This is more of an advanced trade, honestly. But again, following those mitigations on the 15-minute, you can see prices continuing to push down. We're making pretty much lower highs, lower lows, lower highs, lower lows, right? So knowing that, if we now drop down to the 5-minute, we can kind of analyze this price action even further. So obviously London was extremely bearish. There's pretty much a mitigation here. No liquidity really, but obviously there's bearish intent there. And moving forward, now if we were to sort of mark out here, Dan, where would you mark out the next mitigation and liquidity?
I pretty much had a 15-minute.
Right, so let's pull back to the 15-minute for a second. The way that I had it was the wick pretty much. So again, it's very like hard to see it, but there's this kind of this wick here. Sorry, not that one, this one here. And you can see on the lower time frame, as we'll show you in a second, where this is pretty much liquidity. Again, very subtle because we're looking at like the 15-minute wicks here. But if you look at that as liquidity, and this is our sweep, mitigating this 15-minute wick, which I believe is a 5-minute inside bar. Yeah, there it is. That's the one I was looking for.
Yeah.
That's kind of what we're looking at. And this also swept Asia's high, or this liquidity that kind of built here. Again, very subtle. Like we're talking like, sub 1 pip sweep of liquidity here. So it's not your typical thing in terms of like, sweeps of liquidity. Normally you expect something a little bit more, but it's definitely there. And if you can spot that subtlety, then there's a trade opportunity here. Not to say that it, holds for that long. Obviously this trade expired pretty quickly. Because of all the liquidity that was sitting up here, and eventually it did get swept completely. So if we look at it like this, and I'll show you guys the markup that I had on the chart itself before, where again there was like tons of liquidity sort of marked out here, and we're aware of it, knowing that this is an aggressive trade, and that's why we managed it aggressively too. And we took 80% off pretty early on, and kind of let the rest ride in anticipation that it would break lower, but because it didn't, we were able to take enough profit off of the trade that makes it worth taking. So again, that's the 5-minute. If we look at the we can also mark it out. It's an inside bar. We can mark out the equilibrium of it. It's the same deal. As you can see here, the 50% of it gets mitigated as it sweeps this liquidity. So now moving on to the 1 minute, and this is where Dan and I pretty much entered. And we kind of like spotted it and we're like, okay, I mean, it pretty much lines up with our model. We're just trading liquidity sweep. How do we enter, right? So we pretty much saw, well, Dan, I know you saw like this inside bar here. I kind of like was looking at these few candles here, so it would technically be like a 3-minute order block. But I pretty much marked out something like this, I believe, and then the 50% of it. I think your trade was a tiny bit different. I think you had a bit of a larger stop loss, right? I think mine was like 1.9 or something.
Yeah, no, mine was like 2.5 pips.
Yeah, and that's fair, right? Like there's nothing wrong with adding buffer, because honestly, I think if you hadn't set it break even, you might have actually stayed in here, and it's kind of, again, it's still ranging, but you could have stayed in potentially if you held that last 20%, which Dan did. He just set it to break even. I trailed my stop too, right? So, but anyways, so again, same thing. Now that we're zoomed in on the 1 minute, we again have this liquidity. We swept, we pushed down. This is our breaker structure here. Remember that we're in this 5-minute order block, so you have to keep that in mind. You always have to keep the higher time frame in mind too, right? Again, bearish on the 4-hour, bearish on the daily, swept liquidity. Here's our break of structure on the 5/15 minute. I'll show you guys that now really quick. So you can see here on the 15 minute, we actually close below. We close below this low here. So that's a break of structure to me. That's good enough. Same with the 5 minutes, even more clear. But the thing that Dan and I always look for when we're looking at subtle like setups like this where we're not 100% sure is we want like a clear break of structure. So the higher relative time frame that we have that break of structure happening, the more likely we're gonna take the trade, because we feel more confident in it working out. So we saw that, and then we see this liquidity built here after the sort of initiation. So I'll kind of break it down as I was explaining it to Dan. This is the way we look at it too, is we have like a few ways of breaking it down. We have pre-initiation liquidity. Again, as I mentioned, this is like the third time I'm talking about it, but it's important, right, that we understand there's liquidity that was swept, mitigates something. Liquidity gets built after the initiation, so this is post initiation liquidity or pre-reaction liquidity, this being the reaction where we enter. And then again, we even have liquidity here on the 1 minute, pre to the reaction, post to the initiation. So these are all super like nice confluences that we're looking for. There's our sweep, and this is where we had our limit order set pretty much. So again, I had mine at 1.9. Dan had his at like 2.5. Yeah. And then that's how we entered. And I'll quickly show you guys the markup here.
That broke the low.
Sorry, what's that, Dan? Here, I'll pull it back on the other chart there.
Oh, pretty much like after I broke that low, that's where I took 80% off.
Yeah, this low here, right?
Yeah.
Yeah, that's where I started trailing my stop, I believe. So again, I'll show you guys the live markup. This is from the actual trade that I took this morning, how I was marking it up. It's not exactly the same, but it's close. You can see there's my 15-minute break of structure, the liquidity, liquidity, sweep, sweep. This is how I got in. 1.9 pip stop loss. I didn't mark it out here, but I had, as I mentioned, when Dan and I saw like that it broke the low, I set my stop loss here, and then I took 75% off, like in and around this low, because again, the fact that this was so subtle and there's so much liquidity sitting above here, as I have marked, I wasn't like 100% confident that it was going to continue down, but I mean, that's why we take partials and let the rest run. Yeah, that's pretty much it. And then I got stopped out here with my trailed stop, and yeah, I closed out at about 9.1 R, which is pretty good. It's a pretty nice trade for me, considering I only took 2 trades a day. I took an L on EU earlier this morning too. So, oh yeah, and one other thing. So there is also technically a long here. Again, because we're so rangy, this is a counter trend trade. I'm not suggesting that you guys take it, but similar thing. We kind of have liquidity here. Taps into pretty much like a 5-minute. If you want to mark out the equilibrium of this 5-minute wick here. Sorry, not the wick, but the order block, the demand zone. So you have this 5-minute. Actually, it doesn't even look like it hits equilibrium. Anyways, I didn't take this trade.
Like a larger FU.
What's that?
It's just a larger FU, pretty much.
Yeah, I mean, here's the thing. Like, you could have taken this. We know somebody that took it. I think he had a pretty large relative stop loss. That's fine. This is a valid trade too, right? So I mean, they're all over the place. This is a great trade to me, even though it's counter trend. Not saying I necessarily would have taken it, but same principle as the short, right? You have liquidity here, sweep. We build liquidity pretty much all during Asia and like the end of New York. We build liquidity right at the bottom of London, or sorry, in the center of or in the middle of like London lull. Then we sweep into a demand zone and price pushes up higher, right? So that's a nice long as well. Yeah, that's pretty much it. Thanks for watching, guys.